Welcome to our Hear From Her series where we speak with outstanding women leaders and achievers in Singapore. We are very excited to have Yoon Mee with us today, a Managing Director at OCBC Sustainability Office. Her role involves advising corporate and institutional clients in sustainable financing solutions, and she has played an important role in OCBC's decarbonisation and net zero journey. Thank you, Yoon Mee, for being here today. Maybe we can start with a little sharing on how your team has been supporting corporate clients in their sustainability journey.
Sure. Thank you for having me. It's a great pleasure to join the Hear From Her series from OCBC. I'm from the Sustainability Office for Global Wholesale Banking Division, sustainability team for our corporates and institutional clients. I joined the bank 4.5 years ago to kickstart sustainable finance activities for our corporate clients. You may remember sustainability and sustainable finance by then was a very new concept, but I'm genuinely happy with the progress that Singapore and OCBC have made on this front since then. So speaking about sustainable finance is our efforts in embedding sustainability in the way we engage our clients through our daily dialogues or through products and services that we offer to our clients. More companies, small or large, in almost all sectors are trying to contribute to a sustainable economy through their main businesses and products, while proactively managing their environmental and social footprints. So it is a natural thing for a bank like us to offer banking solutions that supports clients' ambitions. So we do that mainly in 3 ways. First, by bringing capital to corporates and projects that generate environmental or social benefits. Green loans or green bonds are typical products for this purpose. These products also give clarity to banks or investors on what their money is doing. Another sustainable financing is sustainability-linked transactions. We offer financial incentives to improve sustainability performance of our clients. Typically, we would try to understand corporate material sustainability issues, then agree on their progress and set annual targets. Then the progress on these targets can be linked to the pricing of the funding. Last but not least, we're increasingly building partnership with our clients. Not exactly sustainable financing, but as a large bank with multiple touch points with many corporates in the region, we're in a good position to connect people and companies. For example, the bank launched an SME Sustainable Finance Framework back in 2020. Engagement on green loans leveraging on this framework helped us identify and deepen our relationship with SME clients, offering greening solutions like improving energy efficiency, better monitoring and reporting emissions, and solar developers, etc., etc. On the other side, we also have companies who are looking for those solutions. So naturally, we started connecting people, creating a nice ecosystem for sustainability. Case in point, last year we partnered with Semco through their newly launched Gold Net Zero platform to encourage our clients, including SMEs, to install rooftop solar panels and gain potential revenues from selling renewable energy certificates on their Go Net Zero platform. Last 4 years have been very exciting years for me in the bank, and I believe we achieved a lot together. Sharing some numbers, as of last December, the bank entered into more than 200 sustainable loan transactions for large companies and financial institutional clients, and we acted as a sustainability coordinator or advisors for more than 130 of them. When I first joined, we were given a target of Sing$ 10 billion of sustainable finance assets by 2025. Fast forward, we had to refresh those targets twice, upping it to 50 billion by 2025. And last quarter, our SFSs were already at 47 billion.
Thanks, Yoon Mee. It's great to hear the bank's achievements and developments in sustainable finance over the past few years. More recently, OCBC joined the Net Zero Banking Alliance last October and released science-based decarbonisation targets as part of our commitment to achieve net zero financed emissions by 2050. Could you elaborate on our net zero goals and what this means for the bank?
Sure. So as mentioned, we've been quite actively working with our clients who are leaders in sustainability space by offering sustainable financing or partnering with them. But we also recognize that all parts of the economy have to be mobilized if you want to keep the overall temperature rise to below 1.5 degrees. Banks has announced net zero targets for 6 emission-intensive sectors: power, oil and gas, real estate, shipping, aviation, and steel. With these targets, we'll measure our clients' emissions and set decarbonization targets for our portfolio globally. As you may know, Scope 3 emission is the biggest part of our emission as a bank, and finance emission among all these Scope 3 emission is the most material one. So I'm very excited about mainly for two reasons. First, it's really a new level of sustainability commitment from the bank, aiming to engage our clients on their transition efforts based on data and scientist-guided pathways. And these targets will inevitably influence or shape our business strategies in the future, promoting, supporting transition of our clients through our banking activities. And we call this as a net zero, as we aim to be net zero by 2050, but we also had to ensure that we are taking actions immediately. So we are also setting interim targets for 2030 to guide our immediate and midterm actions. So many of us would not have retired by then.
So you mentioned that 6 sectors were selected for the targets. How were these 6 sectors selected?
Good question. As a member of the Net Zero Banking Alliance, we will need to set our targets on all emission-intensive sectors in coming years. But we had to start from somewhere. So we selected 6 sectors to start our long-term journey based on 4 considerations. First of all, we selected emission-intensive sectors to start. For example, power sector is responsible for 40% of the global emissions, and energy overall emits around 75% of the entire emissions. So it was a natural thing for us to start from there. Then we look at our portfolio to see what's material sector in our portfolio. So the select 6 sectors are about 2/3 of our loan portfolio. Then we look deeper into the portfolio to select the sub-sectors that matter. For example, for aviation sector, most relevant activities are burning of jet fuel, basically a fuel for airplanes. So we prioritize that. All in all, 42% of our overall portfolio, both from large corp and SME clients, were included in this target setting exercise. We had to consider availability of the data. Then we also had to consider data availability. As you'd agree, availability of quality emission data is a real challenge, especially if you want to track all your clients, including SMEs. Then we also had to consider decarbonization pathway that we can rely on, because ultimately decarbonization pathway is the one that we aim to follow. So we had to see whether there are credible pathways that we can follow. So these are the 4 considerations that we used in selecting 6 sectors. While doing this, we learned that each sector has its unique challenges and characteristics. So we had to assess our financed emissions and set net zero targets at a sectoral level using sector-specific metrics and reference pathway. So for example, power sector is a very interesting sector when it comes to decarbonization. However emitting, we all need electricity for social and economic development. Access to clean energy and, let's say, internet can have a direct social impacts, especially in emerging markets where OCBC is present in. And also that explains the whole discussions around the just transition. Also, other sectors are relying on power sector offering clean electricity. For example, electric vehicle will be clean only when it's powered by renewable energy. So in our net zero scenario, we expect more demands for power, meaning that overall electricity generation has to grow to achieve the sustainability goal while reducing its emission intensity quite drastically. So we track carbon dioxide per megawatt hour of power generated to support growth of this sector while reducing the emissions. Power is also a sector that has to reach net zero by 2040, not by 2050. This is related to the fact that many other sectors are relying on clean electricity for their own decarbonizations, and also power is one of the sectors that have commercially viable clean technologies that we need to scale up. This means that we need to finance a lot more renewable energy and need to influence our clients to transition their portfolio quite soon. I can go on, but I will not bore you with all the detailed approaches and targets. Please come to OCBC website to find out more. If you Google OCBC Banking on Net Zero, you can download the 71-page report and summary slides explaining how we came about these sectorial targets and what are the key decarbonization levers for each sector.
So looking ahead into the future, what are some major developments in sustainable finance that we can anticipate for the rest of this year?
Sustainability and sustainable finance sector is fast evolving, almost threatening sustainability of people in sustainability, but highlighting some key developments that I observe. First of all, sustainable finance activities will continue to grow, both on loan and bond side. We'll continue to see innovative products addressing specific needs of certain sectors and markets. We'll see more on social and nature-based capital or biodiversity, we'll see more transactions addressing social or biodiversity considerations as well. I also believe that there will be more risks of greenwashing allegations. But I do hope that market taxonomies and the evolving standards in the market will bring another level of confidence in the integrity of sustainable finance markets. Another one would be scaling up of transition financing. Transition financing is nothing new, as you may have heard about it quite a lot. But it did not really take off at scale, as it was quite challenging for us to assess credibility of transition, especially in carbon-intensive sector. Now, many banks have worked on their net zero targets, giving them some tools and guidance in assessing transition plans of their clients. So I expect that there will be more discussions on transition financing in diverse forms, based on data and science-guided pathway. Another one that will help is the upcoming taxonomies. Both ASEAN and Singapore are preparing their taxonomies, and both of them try to give quite comprehensive guidelines on transitions, which will give us another level of comfort in our client engagement. Lastly, there will be more emphasis on collaboration and partnership. Again, this is nothing new, as we've been emphasizing collaboration beyond the BAU across the sector and organization when it comes to achieving sustainability goal. But while we're working on the net zero project, we realized that current BAU banking business may not be sufficient to reach net zero, as many of the decarbonization levers that we identified for each sector were not commercially viable yet. So we are hoping to mobilize all the connections, resources, and influences that the bank has so we can meaningfully contribute to sustainability of real economy. This also expands to tech companies. There have been many efforts to leverage on technologies to address challenges in sustainable financing. This is an area that I'm personally very interested in, so I've been watching quite closely. Finally, we start seeing interesting cases where banks are onboarding technology players to get necessary ESG data for their client engagement or sustainable financing. So quite an exciting areas to watch.
Thanks, Yoon Mee, for taking the time and for the very informative conversation. We hope the audience has learned a little more about OCBC's net zero commitments and initiatives, as well as sustainable finance trends we can look forward to in 2023.